We're talking in the green room before the show about how important this one stock is to a constellation of trades that make the stock market go higher or lower.
It's hard to think back over literally centuries and find a single company that had so much sway over the global economy or the global financial market.
Hello, YouTube. How are you? My name is Mike. Thanks for joining me today. This is Health and Wealth. Today, we're going to talk about my main holding in my portfolio. One of the almost original ETFs over at YieldMax, Nvidia, NVDY. This is a high yield paying distribution whammo payerson here. And it is going to be an interesting conversation here because this is where I hold most of my money is in Nvidia. And so we're going to discover what they've paid out so far, what the average payment is, how many months they paid out, and things like that. I also want to go over Nvidia itself. And you saw there at the beginning, it was a Nvidia conversation. So I just made a video a couple of nights ago about MSTY. It's so simple to find hype videos for MSTY. Well, mostly for Mr. MicroStrategy and Bitcoin, because I mean, that's where the craze is right now, is with Bitcoin and cryptocurrency, things like that. Now with NVDY or Nvidia, it's not as easy to find hype videos. And why is that? Why would that be the way for the number one company in the world, right? So it could be a couple things. Nvidia just came out with their earnings call a couple of weeks ago, and they mentioned that they're not going to continue to grow as fast as they did the last year and a bit. They mentioned that they will have a slowdown over the first and second quarter of this year of this next year compared to what they had last year. But they are still looking at 30% growth. It's just not going to be 100% and 150% like it was before. So, what does that mean to you as a Nvidia shareholder? Well, the first thing I think about is that it's going to reduce the volume with that stock. And when volume is reduced, trading back and forth, when volume is reduced, so is the income that you can generate from options. And how do we make money? We make money from high volatility stocks that pay us income on our uh, options that YieldMax trades for us, right? So synthetic options and calls, that sort of thing. So if the volume is reduced, therefore that should also mean that the amount of premium you generate from a call should be reduced as well. Now, that's the negative side of it. The positive of it is Nvidia has so much volume already. It's, the highest grossing company out there right now. That we YieldMax should still be able to provide us with a good income every single month. What I've noticed is that YieldMax likes to go 4% out, 3% out of the money. So I'll give you an example. If the share price is $144, YieldMax likes to go, 4% away from that, 5% at the most sometimes. And then they also like to do their credit call spreads. Well, if we know that the volume is going to be reduced, we know that there's going to be no catalyst really over the next, 2 months, 3 months, or maybe even up to 6 months from now, then there's no real need for a credit call spread. And so if we get rid of the credit call spread, that would be money in our pocket already because we're not spending that money to make that happen. And if we just go out of the money 10%, even 15% more, we're still generating weekly income instead of paying money out. Now, how does that benefit us? Well, we're going to get a small amount of money from the weekly income that YieldMax generates from us because they're not having to pay out money to create a credit call spread. They're not having to pay out money to close options that have the price of the underlying has gone over their option or their strike price. So that's two wins right there. So the weekly, yes, will generate money. Then also on the synthetic option, which they generally do a pretty good job of, we would make money with that as well. So the synthetic option, let's just say it's $144 today. They know that 2-3 months from now, the company is thinking that they're going to grow by 30%. set the option for 10% from now, the synthetic option, and let that price rise up and bring in the money that way. So that's two ways. So that's what I've seen over the last few weeks is a lot of credit call spreads when definitely not a need for it right now. This stock isn't as volatile as like a Misty or a MicroStrategy, sorry, is, right? So there's no real need for that, in my opinion. So what I've done here is I've gone ahead and opened up the website, YieldMax's website, and they're currently paying out a 59% distribution. They have announced that a new distribution is coming out. What day are we today? Today's Thursday, so tomorrow will be payday for Group B here, and Group B, its biggest name in it is MST. Sorry, oh my goodness, oof, Freudian slip there. Its biggest name is NVDY, Nvidia, and it's going to be paying out $1.18. Now, people like myself who live up in Canada, I don't get paid this until Monday, so that's going to be good. I can't wait for that payment. Again, it is my biggest holding, so I'm excited about getting that payment. And let's discover where I'm going to put that money once I do get it. So first things first here, I took the liberty of looking at the first 19 months of payout over at Nvidia, and I've kind of indicated that over on the left-hand side here. This is rounded up to the nearest penny, it appears here. So take that with a grain of salt. But if you were involved with NVIDIA from day one, which was May of 2023, May 5th, I think, 2023, um, you would have a distribution of $24.57 since then. So that's really, really good. If you were in there from day one, you've already taken back all of the capital that you've put it in there. So if you put $19 into, per share into Nvidia, they've already paid you $24.57. Now that is in 19 months. And when this came out, that would have been unheard of. Back when this came out, high yield distribution dividend paying ETFs were right around 10 to 14%. This one much higher, and the people love it right now. Of course, history is that Tesla came out first to show this, the premise of this, and Tesla was their flagship product. But then Nvidia came out, and you can take a look at throughout the months here. You can see when Nvidia did really, really well, it skyrocketed, and so did the distributions during that time. So if we take a look at the last few months here, you can see the distributions hovering around the dollar. I don't know, let's call it $1.10 over the last 5 months here. Average might be actually a little bit higher than that. But yeah, I mean, let's go since August. $1.25, $1.35, $1.10, $1.02, and $1.19. I'm pretty happy with that. I'm satisfied with it. I have been thinking, though, about this distribution. And is my money maybe better off somewhere else? Well, I'm going to stick with NVDY for now. If for some reason Nvidia starts paying out back like last August here all the way to December under $1, I'm gonna move my money somewhere else. I am in this for the high yield income. There is potential better options out there, but for me, I'm just trying to regain the money that I've put into it. So far, it's doing really well, like we can see here. But I mean, if it pays under $1, then that's not really kind of my focus, right? It would be another thing if it paid under $1 and it also recapped some of its capital, and so the share price went up. But that's not really what we're in YieldMax for. I would like my capital to stay the same that I put in there. Plus, I want to, maybe I shouldn't call it capital, but I want my dollar amount that I put into it to stay the same. Plus, I want my dividends too. If the share price goes down, plus we are losing on distribution, it goes down as well, then that's a double whammy for me. So I've taken some numbers up here. So today is December 5th. Right now, at the time of this recording, the share price is 24.79. Now, That's not really super fair to bring up because today is the ex dividend date, and so the share price would have dropped, depending on the underlying stock today, the stock market, if it goes up and down, things like that. But the share price we knew was going to drop $1.19 today. It could go up, it could go down from there, depending on how Nvidia does today. But we knew that, right? So yesterday, if we looked at this price, it was above $25. And it was, almost 20. What's the math on that? Can't do the math right now in my head, but it was above $25. So we knew that, right? Now, where it is fair is I did put the $1.19 into the total calculation of those 19 months. So it works out. So it's paid out $24.57 so far. The average payment over 19 months, not 12 months, is $1.29, right? So that's pretty good. If you had have invested in this for day one, it was May 7th, 2023. The share price was $19.89. So your share appreciation is up $4.90 since then. Plus, you've made 24.57 in distribution. Now, I don't really know anybody that has been in it since day one. So if you have, let us know how you're feeling about it. How are you feeling about the latest distributions in the comments below? So I do want to come back to this page in a bit. I just want to share some more information with you here. You can see the yellow is my NVDY distributions. This right here is passive that we're looking at. This is a distribution. I'm gonna stop calling distribution for a moment. This is a dividend tracker. And so it tracks all my dividends. Everything I get goes through here. It's pretty cool. I get an email whenever I get a new dividend saying, "Hey, you have money in your account over at Questrade." But yeah, this is a really neat tool. You can kind of create goals for you. It is linked to your Questrade account, which is nice as well, along with other brokerages there. Um, and so you can see your total distributions. Now, I have it just set for 1 year here, but you can change that to all time, and then you can go from there, right? So you can see I've been trading. Well, I've had distributions since January of 2020. Look at that one, eh? $48 in Costco and $1 in Apple. Oh, the memories. How was it the next year? Had some Enbridge, CN, Apple. If you're in Canada, you like Enbridge. There's a ETF called ENS.TO. It's similar to how MSTY and Nvidia do it, but with Enbridge. And I think it pays 13 cents per share every single month. If you look at the charts with ENS and Enbridge, they're very similar. I had this split share fund called FFN.TO and DF.TO. Then 2022, nothing in there really. That was during my growth phase. Last year, 2690 in dividends, and then this year so far 7,294 in dividends. So it's definitely gone way up in the last year here. So if I go 1 year again, you can see here Nvidia so far has paid me $3,993. Now that is not including this one coming up, and I'm going to share that with you right now. Let me just scroll up here or scroll down. So here we are. Here's Nvidia. I've had it for 8 months now. This is going to include my upcoming dividend. So my total investment in Nvidia so far is $11,196. So the average price of my shares is $27.99. The current price of Nvidia is $24.80. So my unrealized loss is $1,276. Now, if we take a look under column B, you'll see my total investment. You'll see my total dividends. This includes tomorrow, or for me, Monday's dividend. So $3,510. My realized return on capital percentage, mind you, is 27%. That was last month. Now, this month with this new dividend is 31%. So if we take a look at that, is it averaging 4%? It looks to be very close to averaging 4% a month. That's pretty good. That's 8 months, 4% a month. That's not too bad over a year. 48% over a year coming back in. Your traditional investors. If you talk to your long lost uncle, and you say, I'm getting 48% back in dividends every year, they're gonna laugh at you and say that's not possible, right? So they're invested in Coca-Cola, Apple, things like that that don't have a massive yield. And so 48% return um, on realized capital here is massive. It's really, really good. And so, what am I doing with that money? Putting it in other funds to grow my castle. Now, when we talk about unrealized loss here, $1,276 or 9% so far. This is money that is still in my account. I haven't sold those shares. And so the hope and the dream here is that every single month it goes up at least 4% every single month till this reaches 100%. That should be a year and 2 months, 3 months from now. And if you think about that, a year and 3 months from now, that would be 2 years since the start of the investment. To get 100% back in 2 years, you can't really be too upset with that. And I know I would be pretty happy with that for sure. Remind me near the end of the video. I want to come back to this page. I want to go over this black box with you. I think it is something to maybe kind of open your eyes up to, and some of you, your eyes are already open. Let's take a look at NVIDIA ETF itself, $24.83. So it's doing all right. If we take a look at the last month here, down $1.15. Why? Well, today we just got news, or today's the ex-dividend date of $1.19. So that's pretty good. Now the hope is that in the next 4 weeks here, that this price goes up at least $1.15. We stay even with our share price at a minimum, and then we still get our dividend next month, right? That's the hope. That's what I hope right there. Now, if you look at the last 6 months, we're down 20%, so that's not great. But I mean, if you look at the last year here, we did have some highs all the way up to $31.30. So pretty good. But yeah, you can see kind of the 1 year chart there. If I go all the way out from day one, which is May 12th, 2023. May 12th? Did I say May 7th? Whatever. Who cares? Semantics. It's there. Now also we have Nvidia stock. It's just hovering, right? $145. My expectation is that this is probably going to hover for the next 3 to 6 months. It might go up slightly, like they said in their analysis. They're up 30% in their earnings call. That's their goal, and 30% is huge on a $145 stock. That's for sure. So, yeah, that's what I'm hoping for as well. Just steady growth, and as the stock goes up, hopefully so does our money in Nvidia. Right now, just to make sure this is clear, this is not stock advice. This is not advice at all. I'm just kind of voicing my opinion on what I want to see with my Nvidia shares. This is for your entertainment and mine. If you are entertained even slightly, consider subscribing to my channel. I have just over 2,100 subscribers so far, which is incredible considering I just started really making videos in August of this year. So I appreciate that. And I also appreciate the 3 members. Thank you for helping, me out. It really, really is great. Much appreciated. Okay, so there we go. That's what I wanted to talk about with the Nvidia stock and Nvidia itself. And I took a quick look here. If you've seen my videos before, you probably noticed that I kind of do the same thing with my MSTY shares as well. And so I've got that over to the right here. And I want to share that with you. Now, a lot of people that watch this video are already invested in MSTY and probably soaking in the MSTY money as we speak. So in 19 months, Nvidia has paid out $24.50, 57 cents. That's pretty good. I think we can all agree on that. But let's take a look at MSTY and let's analyze that real quick before we get this video off here. Here we go. So MSTY has paid out 8 months. It's already paid out $24.42 in 8 months. So less than half the time, and it's paid out almost the exact same amount as Nvidia. On top of that, MSTY's share price has gone way up considering what it started at and what it's at. You know, I haven't updated that 33.91, but it has gone up from then, from that price there. But and that was just 2 days ago. So I looked it up. The price today is $34.36. So up a little bit considering over the last couple of days. But the point I'm trying to make here is don't get married to your purchases. Right now, I have 400 shares of Nvidia. 400 shares. So am I married to that? No. If I notice that there's a change in the distribution, if I notice that there's some mismanagement potentially happening with their calls, then I'm going to move my money somewhere else. And so I definitely want to put this message out in the world. Don't follow what I do. You know, do your own thing. I think it's important to diversify. And by showing you that I have 400 shares of this, 100 shares of Nvidia, 22 shares of Coney, that is not diversification. And for me, I am what's the word? I can move quickly. I am not married to Nvidia, but I am happy that it's paid out 31% in the last 8 months to me. That's for sure. So, how do you feel about your portfolio? How do you feel about Nvidia's performance here? Specifically, Group B yesterday. I know a lot of people were a little disappointed that the dividend was a little lower than usual. For me, I'm okay with it as long as it's over $1 every single month. You know, my average price is $27.99. So if it's $1 every single month, it's going to take me 28 months to recoup my money. And I mean, can you really go wrong with that? 28 months to get your money back, and then from there you build and build and build. I don't think I can, be too angry at that personally. I did want to talk to you about one last thing here. My channel, 2136 subscribers as of right now. Thank you so much for that. I'm going to leave this video off with a video talking about Nvidia right around the earnings call time. And so I hope that you enjoy that. And then I'll say hi and bye at the end of that, okay? Enjoy.
It is Ray Wang, Constellation Research founder, chairman, and principal analyst. Hi, Ray. How are you?
Hey, good morning.
So did the decline in the stock price make sense to you? Is this just a case where Nvidia can beat expectations, but it's almost impossible to beat the highest whisper numbers on the street ever? There are just such high expectations built into the stock every time. This is not a big sell-off. It's down by less than 1%.
Becky, you're absolutely right. I think people were taking money off the table. It was more than a mic drop moment. It was a spike the ball in the end zone performance. But the problem was everyone saying, hey, what's going on, right? Should we take some money off the table and come back? And I think that's really what happened. I mean, these were some big numbers, right? 19.83 net income, 37.5 billion in guidance. That's huge.
Yeah, it's hard to find many flaws or faults at all with the numbers that came through. It does remind me of last quarter when they beat expectations again. The stock was down immediately after the earnings, but then it went on to grow something like 17% over the course of the last 3 months since then. You've still got to buy on this. You're looking at, I think, a $180 price target. The stock's at $144 today.
I am, and here's why. When we look at the Mag 7, they're basically growing exponentially versus the rest of the Fortune 500. So 7 stocks are basically growing really quickly, and Nvidia is basically selling to 6 of the 7 of the Mag 7, and it's a huge number. It's about 50 billion a quarter in which these Mag 7 are spending in terms of data center growth. And so that's really what's driving the majority of Nvidia's revenue in the data center side. So that growth from 3.8 billion to 30.8 billion in 2 years is huge, right? Gaming doesn't even come close. Gaming was up at 3 billion. And so what we're seeing right now is still a massive build out on data centers. That's going to happen for the next 12 to 18 months. And that's what's driving it. And then after that, we're going to see something different, which is in the sovereign AI. Countries are going to say, hey, right, our companies can't catch up, and we've got to invest at a country level.
Yeah, I've heard people knock Nvidia because it's really just these big companies like the Metas and the Amazons that are buying all the chips right now. But that's because they're first in line. Nobody else can get through to them. When you hear about the demand that Nvidia will discuss, Jensen Huang will discuss on the conference call, it's hard to look at the supply versus demand as a problem. It just means far more people want these chips than they can possibly produce at this point. If you were looking for a hole to poke, because most of the holes that I've heard people try and poke in this argument don't make sense to me, what's the best argument you can think of for why you might be concerned about the stock?
The only reason I'd be concerned about the stock is living in the valley. What we're seeing is a ton of people at Nvidia retire. They put in their 5 years, they put in their 10 years, they're leaving, they're cashing out, they're doing something with their lives. And it's really the talent that's going to be hard to beat given that stock run up. The other piece is really Blackwell to Rubin when it happens in 2026. The question is, same questions people are going to ask, are the chips going to be hot? Are they going to work? I think that's where people are worried about. But right now, these chips are 2.5 times faster. And of course, they cost 2x as much. And people are willing to make that bet.
There were those concerns in the last week or so about the chips overheating, the Blackwell chips overheating when put in some of these server arrays. I've read other reports that people are speculating it's already been corrected. What do you think?
From our conversations with people over there, it has been corrected. And I think the other piece that's happening is this is really complicated. Not a lot of companies have ever done this before. And I think they've tried all different possibilities and combinations. And I think they've figured out a couple solutions. And that's what we heard. And this shift is actually important because if you think about what is next, right, it's going to get even smaller and it's going to get even hotter. And as you know, the consumption and the power consumption on these chips hopefully come down, but people keep stacking more chips in one place, which is why they get really hot in data centers.
Talking in the green room before the show about how important this one stock is to a constellation of trades that make the stock market go higher or lower.
It's hard to think back over literally centuries and find a single company that had so much sway over the global economy or the global financial markets. I don't think there is one that hasn't had any backing per se from a government, even like British
like
East
Cisco
Indies.
in 1990?
Not as big as this, relatively speaking. So it is incredibly important, not just for the people trading the tick by tick right after the earnings and the call, but also when you take back a step and think about the macro picture. And honestly, this is the heart of U.S. exceptionalism. When we talk about why the U.S. outperforms for decades or more, this is it. It's tech dominance. It's the weight of tech in our equity market. It's the fact that we have companies, the Mag 7 over the next 12 months will invest $500 billion in CapEx and R&D. Wow. So put that in context, Chips and Science Act was $52 billion. So this is many multiples of that. So it's just the scale of our dominance, and Nvidia is the cornerstone of it. So whether they disappointed or not, to me, it's the fact that you have this structural advantage.
Right.
Let me make one point about that. I think that's really interesting. That's the estimate for $500 billion in CapEx and R&D over the next, what did you say?
Next year.
Okay. So if it comes in at 450, all right, just think about that. What happens to these stocks? Like, they're going to go down a lot. And you know what I mean? It wouldn't incrementally take, because estimates are going up. And the one thing I'll just say, if you go back to Microsoft, they're 19% customer of Nvidia, right? And we talk about CapEx, how much it went up. It didn't go up that much, right, after they reported. And so we're not seeing the sort of step functions that we saw, let's say, 3 quarters ago and that sort of thing. They also talked about being capacity constrained, one of the reasons why they didn't have higher revenues. Now, their cloud business is growing 31%, year over year, which is fantastic. They're taking market share from AWS. I just kind of feel like we're going to go from capacity constrained to capacity over, built, that sort of thing in the not so distant future. And so when you're coming in and you're beating these numbers just by a hair, and the stocks are still sticking around, it shows you that investors still want the exposure, but sooner or later, I think it's going to be like one of those things where you're going to start seeing a couple quarters of declines by not just the picks and shovels, but also the hyperscalers.
I think that's a ways off, though, and I think that the hard part of owning Nvidia is if everybody knows, all right, 6 quarters from now they're going to have slower growth. When do you exit?
Yeah,
but you want to exit before all the other people decide to exit. So I don't know.
Amazing. Well, there you go. I don't know. That's a great question. When to exit? I'm holding this thing. I want it to make me money, but that's the question that I always think about. So my name is Mike. This right here is Health and Wealth. Thanks for tuning in. If you like this video, here's my MSTY video. I hope you have a great night. Bye for now.